We have on the set Kirsten Grind. How are you, Kirsten? Because we are starting off with this BlackRock story. I saw this last night when it came out. It's very interesting to me. Why don't you explain what they're doing here?
Sure, definitely. So BlackRock is planning to launch a trading platform this year for clients in its BlackRock Solutions Group. So they would be able to, what's known as cross-trade against each other, bonds primarily.
Bonds, go ahead, John.
I was just going to say, when there's some sort of a market initiative like this, one of the key things that people always bring up is this make the market more transparent or increases the opaque aspects of bond trading? What kind of impact would this thing have?
You know, I'm not sure if it would have an impact in that way. Really what they're trying to do is just increase liquidity for their clients, because look, if there's two clients and they both one wants to buy and one wants to sell a security, why not match it? In terms of opaqueness, what will be interesting is that actually their orders would have to be live at the beginning of the day, so the clients would be able to see what everyone is doing, which would be different, and that might actually be a challenge for them.
But if you talk about liquidity, I mean, the bond market's a pretty liquid market, isn't it? So, I mean, I guess my real question is why are they doing this? Why are they doing this end run around the established markets?
Right. So BlackRock has always had a very strong position against the spreads that their clients have to pay to the street. So by doing this, they're able to just get around the street, and their clients will have to, anyone using the platform will be paying a much lower fee. And so that makes it much easier and better for everyone.
So it's little money savings for their clients. Is there some kind of profit in this for them?
Well, I mean, obviously, it's not for them. It's not so much about profit, and it's still in such an early stage that it's hard to say how much they'll really be able to make from this, right? Also, they've really only had several clients sign on so far, several of these BlackRock solution clients. So we'll have to see.
So they're just doing it as a service, additional service to their clients? Is that the idea? I mean, it sounds like to take a step like this, it sounds like it's not going to be cheap to run this type of a thing and a type of platform.
Right.
There seems to be a profit motive. Has to be.
There's always a profit motive, but look, I mean, I think what this is really showing you is just how big BlackRock has become, and they've actually already started a huge push to cross trades among their funds. They started that a couple years ago, so this is just almost an extension of that.
And where does the resistance to this come from?
The street's obviously not excited
Goldman
about it.
Goldman Sachs, Morgan Stanley,
right? I mean,
regulators.
Right. That's what I want to know. What are the regulators going to say about this?
Well, they're actually seeking approval from the SEC right now to do this. So there hasn't been much on the regulatory front yet. But I mean, the street. Look, BlackRock is one of their biggest clients. They pay billions of dollars a year in fees and commissions, and even though they're not going to completely bypass the street. As they've said, we're not trying to cannibalize them. But at the same time,
they're trying to cannibalize them. I mean, it seems to me this sort of gets to the heart of this whole issue of trust on the street, of what the markets are today. Who trusts that they're getting a fair price when they put in a bid? Who trusts that they're getting a real good deal? I mean, philosophically, how much of a blow to this is the market? How much of a blow to the markets is this move? Especially coming from BlackRock.
It's a blow, but it's potentially not as big of a blow as everyone maybe is thinking at the moment. Because look, I mean, the chances of the volume on that platform being quite high and really sucking money from the street is pretty low, because there's thousands of bonds. I mean, the chances of two clients actually crossing is actually quite low, and BlackRock is saying, look, we're still going to be paying the street. They are, obviously. So it's a big deal.
Yeah. All right, well, we will see what the SEC says, and we'll see what they do, and we'll have you on again.